Well, guys, thank you guys so much for being here. Philip, you're cracking me up because like you see your logo and then your head's just like peeking in the corner. It's amazing. If you guys can turn on your cameras, we would love to see you. It's a lot more exciting to be able to see your guys' faces than looking at screens. But we'll take what we can get this morning if you're in the field or driving. We're just happy to have you here. Um, we're going to start with wins as we always do. But before we get into that, I just want to kind of I don't know if you guys saw the emails, but we're going to have a Q&A session before we get into the presentation. We'll still have one after, so don't worry about that. But before we get into the presentation, we're going to have a Q&A. This is any questions that in regards to business or about my pets. Those are fine too.
Oh my.
But any questions that you guys have, um, just this is an opportunity to get feedback from other coaches, to get feedback from other clients. You've at least once a day. I have a client ask me like, "Do you have anybody who works with blank company, or do you have somebody who's worked with this financing company?" This is the time. Ask those questions here because it's a lot more. This is where we're gathered. You're going to be able to get feedback and answers faster. And so before we get into wins, I want you to go ahead and start thinking about, do I have any questions, about business, about, softwares that I may be thinking about? Maybe I have this weird employee issue I don't know how to handle. If you want feedback from another coach or from a client, here's your opportunity. So I want you
Yeah,
guys to go ahead and start thinking about that as we're getting into wins.
it's true. Yeah, we have found, the longer we've done group calls, we found a lot of the value is from the cross-pollination, not only for you to interact with other coaches, but also rubbing shoulders with other business owners. I've said it before, and maybe in the group call, but we have the helpful effect of somehow working with good quality people that want to grow their business and want to grow it in the right way. So this is a massively valuable resource to each and every person here within each other. And we really want to foster that. So that's what this is about, is to provide questions like Nicole said, but then even to engage and interact. And we want to create space for that with some of this time. Because we've had people that have asked even afterwards, how can I get this person's phone number? Or can you send me this one's email? Um, just because we want you guys to connect. So giving you some time to think about the questions because it's a new thing. I'll go ahead and transition us to the wins, and then we'll circle back around to the Q&A time. But we just wanted to give this initial heads up to get you an opportunity to think about it. But we love starting out with wins, what good things are going on in your business, in your life. Um, one of the wins that I've got coming into this call, actually two, is one of my clients, Darren with Keen Enterprises. We met yesterday afternoon. He needs help. So we talked about hiring. We got him onboarded on Indeed. Overnight, he got 3 new applicants. And this guy had not been posting on Indeed because he tried it a couple of years ago and it was expensive and didn't know that there was a way to post for free and thought if we can post for free, it won't get good results. We've already gotten 3 applicants in less than 12 hours. So if you're also in that similar boat, I know a lot of people are hiring right now, talk to your coach and we'd love to help you get started on getting applicants, even for free. That's one. And then the other win that I got was just before this call, Profit First, which we talked about last week or 2 weeks ago. Was it 2 weeks ago? I think it was 2 weeks ago, Nicole. But a guy I've been working with for a couple of years now, Hometown Hauling, Colby, he told me this morning, he's like, you know what? I just paid off my taxes for last year and I've made my quarterly tax payment for this year, this first quarter, and I still have money left over. What do I do with it? And so we made a plan for what he can do with his leftover money after paying off his taxes because we've been putting money aside all year to be able to pay for that. And now we have more than we needed. So huge win for him on the financial side, another win on the hiring side. So those are my 2 wins. Hopefully that's given you some time to think about some wins. They don't have to be huge. It doesn't have to be this groundbreaking thing, but we'd love to hear some wins on your end.
If you're not able to jump on the, microphone or camera, feel free to put them in the chat. But we want to celebrate with you guys. So what's good? What's happening?
I'll jump in. I'm Derek with Dump It Dumpster Rental in Little Rock, Arkansas. Been talking with Nicole about our Facebook leads, and we were getting a lot of leads, but not closing a bunch. And so we kind of been talking about nurturing and calling and things like that. So took a little legwork, but last night we actually closed our first Facebook lead, which is exciting. So uh,
Hey.
not a
Right.
huge deal, but it does feel nice to, after you pay for that ad spend to finally see some ROI.
Yes. Derek, that's so exciting. I feel like you've now like seeded the account and it's going to grow from there. Also, Derek, tell us about the eclipse. Derek was in like one of the places you were in Little Rock where a lot of people are traveling actually went. Did you know that Little
Yeah.
Rock was in the
So we
eclipse?
were our city was right in the line of totality, which was pretty cool. So we
Awesome.
like a year and a half ago we secured a contract with the city of Jacksonville to provide dumpsters all across their city for the influx of people that
Wow.
they expected. So the eclipse itself was awesome. I don't know if any of you got to experience it, but it was great. Definitely, definitely one of the most unique things I've ever experienced. As far as the turnout, I think the whole city was in for a letdown because it seemed like there was like no traffic, not a ton of visitors. It seemed like so. It's interesting. We estimated a total of 26 dumpsters for Jacksonville over the course of this whole week, and we'll be lucky to have one of them full. Um,
Oh,
so with everything combined, the good news is
You
is
still got
we
paid?
did we still got paid. So we did require a half non-refundable deposit up front, and so we did still come out making quite a bit of profit on it because we had no dump fees associated and not a ton of extra labor.
Yeah.
So
And a good branding opportunity too. Like that's a lot of people who probably weren't familiar with you guys who now can potentially be familiar with you, who wouldn't have seen you any other way.
oh
So,
yeah, yeah. We they called us and said, "Hey, you can pick up your dumpsters whenever you want," and they were contracted through this coming Tuesday, and so we picked up ones that we need, but there were like there's two that haven't been rented out, so we're letting them sit. So
yes,
everybody who drives by, it's just better brand recognition, and they
love
see.
it.
So
nice.
Love it. Well, Derek, congratulations on closing the Facebook lead and so much more to come. And glad the eclipse went well.
Yeah.
And love that branding opportunity. I think I saw somebody in the chat here.
Mhm.
Um, Brandon with JB Trades, he's over in Colorado Springs. Um, he said he paid his taxes off as well as first quarter taxes paid and has money left over enough to put investments as well as remodel our hall bathroom. So, Brandon, that is huge. I don't know if you can
It's
unmute. Would
awesome.
love for you to share, but I know this is a guy who's been running Profit First for over a year now, does it so diligently. We're big believers here at Redmond Growth of trying to fund your own growth. And this is the opportunity. Not only did he have enough money to pay taxes, but make some investments and take a little bit of that for himself and remodel that hall bathroom. So, just huge congratulations, Brandon.
That's
Anybody
awesome.
else have a win that they want to share? Jordan.
We've got a small one. We
Come
did a
on.
trade show locally here 6 months ago. We did not have an online presence at all. And I had two people walk up at the trade show say, I've seen you online. I've been meaning to call you. I'm glad you're here. So thanks to Redmond for getting us online. And it's 6 months later is driving quite a bit of traffic.
Let's
Ah,
go.
love it. And I love part of that is things do not happen
Right.
overnight. That doesn't mean they don't work. It doesn't mean it's not ever going to work. It means that good things come with time and you got to just commit with it. There's a million and five different ways to market a company, very limited amount of good ones. You just got to commit. So, really appreciate you that explaining that, Brandon. I see Jordan just put in the chat, and this is something that will get me fired up
Let's
real
go.
quick. because I'm so passionate about sales processes. And Jordan said that instead of emailing an estimate, which sounds like that's what he used to do, and I feel like a lot of you probably are in the same boat. You just email over a quote, email over an estimate. He tried to do a video call, but the customer is too busy. But Jordan was committed. He was stubborn. And so he said, let me get this guy on the phone. Gets him on the phone, goes over the estimate, and won a $33K job. And then he's going to do another video call today for another large project. So Jordan, thrilled, committing to the process, sir. I know it's a little nerve-wracking at first, but you will, if you guys take nothing from what we teach you in sales, if the main thing you take from it is giving estimates in person, on video, or over the phone, I promise you're going to see radical changes in your closing ratios. So Jordan, appreciate you putting that win in the chat.
Added a cheeky little comment there. Maybe I did, maybe I didn't. Haha.
Anybody else have a win that they want to share? Go win.
Yeah. We love genuinely, even the stuff that may seem small. Brandon, you qualified your win about that being small, but honestly, we see that as huge. Really, what we want to do is really set the pace, set the tone for what we talk about, because we get into the nitty gritty of stuff that's just frustrating or annoying to talk about. Even the good things, the small things, quote unquote small things are great. We love getting to hear that stuff. So.
Absolutely.
Okay, well, let's jump into the Q&A time here. I don't know if you're about to make the same transition, Nicole.
I was.
Awesome. So in the chat here, you've had some time to think about it. We've gotten to talk about good things. Let's talk about what issues you may be running into with your business, or just off the top things you have on your mind. Maybe it's about what we're going to talk about in the group call presentation portion, but what things, if anything, do you have that you'd like to talk about or ask the group or other coaches? We'd love to help. Running a business is so easy.
I have a question about taxes.
Yeah,
all
go
right,
ahead.
Fernando, let's go.
So I've always heard that the right number for taxes would be like take out 8%, 8 to 10% out of the full ticket. Is that a good practice, or am I just doing way too much?
So, qualifier, we're not CPAs. We can't give formal tax advice, which I know you know. But from Profit First, we actually see 15% off of every ticket is the ideal.
Well, that's of your 15% of your real revenue, not of your total revenue.
Right. So,
sorry, what's the difference between that?
I knew that question, so
Yeah,
that's why I
thinking.
jumped in, Bryce, is I knew that was going to be a question. So with Profit First, your real revenue is, there's two different types of revenue when we're talking Profit First. When we're talking about traditional accounting, they really only talk about total revenue. Total revenue is all of the money that came into the business before any expenses come out, just the total amount that came into your business. Real revenue is what is left over after you pay your cost of goods sold. So your cost of goods sold, your materials, your subcontractors, your supplies, stuff like that. Whatever is left over after you pay all of that is your real revenue. For most contractors, typically their cost of goods sold for a healthy business is going to be around 60 to 65%. That's not a solid rule of thumb, guys. That's just kind of a guess, that's typical, but don't live by that. Talk to your coach if yours is higher or lower. If you're over that 70% mark for really any business, I'm getting concerned. We're getting concerned that you're not going to have enough money left over for taxes, profit, what you're paying yourself, all of that, overhead. So your real revenue, once you take out your cost of goods sold, whatever's left, 15% of that we allocate towards tax. Now, JB Trades, the win that they put in the comments is a great example. I think he does close to 15% and he had money left over. 15% is typically going to give you plenty. You're not going to be worried about taxes. It's probably going to be enough to not only pay the business taxes, but your personal taxes. And you might even still have some money left over.
So kind of like an example, that way I understand. I think I understand what you're saying. So say for example, out of a $10,000 job, um, you're saying like the cost shouldn't be more than 60% or 65%.
So 60 to 65% is a pretty healthy business. 60 would be
Okay.
great. If it's close to 70 to 70%, that 70 or above, your cost of goods sold is probably too high. That just doesn't
Okay.
typically leave enough room for your overhead cost, your taxes, your profit, what you're paying yourself. And so, let's say your cost of goods sold is 60%. And so that's, 6,000 of that 10,000 is going to go straight to your cost of goods sold. So that's going to leave 4,000, which would be your real revenue.
Okay.
15% of that would be $600.
And just put that in the tax account, right?
Tax account. Yep. And you just let it sit there. And at the end of the year, you can be like Brandon and you can get yourself a new bathroom and invest the money back into the business and pay your taxes.
Come on.
Come on. I love it.
Yeah.
I think I saw
Yeah.
a
So-
question here in the chat.
Yeah. So Jordan was asking more for a corporation like your company, you don't at this point pay quarterly taxes like you did when you were an LLC. What our recommendation would be, again, that's maybe where we get more into the details. We would actually want to look at a P&L to make a specific recommendation, maybe do an e-crop through Profit First before we do something like that. But what we can talk about for broadly that would apply well for most people is we know that if you save that 15% of your real revenue, which might actually be close to that 8% Fernando was talking about from just the straight cost, then you should have plenty enough, and it's better to have more than you need than go backwards and have to owe. But yeah, I would say for your question, sorry, Jordan, maybe a little more specific than we'd be able to answer without looking at numbers. Great question so far. Let's go. Any others? Any other thoughts?
I'd be shocked if what we just talked about didn't get people thinking. Don't be shy, guys. Questions about profit and loss statements, questions about taxes, questions about margins, questions about anything.
So I've got a question that I would ask maybe broadly to the people here. Kind of high time for hiring. I talked about Darren with Key Enterprises. He uses Indeed, and or we just used Indeed. What other platforms have you guys found that maybe has produced good clients, or not clients, prospects for you to bring on board? Any hiring platforms you guys have used that are not Indeed? Anything else that has maybe worked that you've hired somebody from that worked out?
While you guys are thinking about that, and you can stick it in the chat here. Fernando, I see that your hand is raised.
Yeah.
Yeah,
Question. This isn't really with like margins and stuff, but it's
that's okay.
having to deal with recently. So we did a full. It was like a big, almost like $40,000 job. Did a bunch of plumbing in a basement, and there's multiple contractors going in and out. And we got like a call 3 months later after an installation saying that they had a leak. How would you guys deal with that, or maybe any other contractors that are on here? You maybe dealt with something like that, right? It ended up having to do. There was over like $3,000-4,000 worth of damages. But I'm in a scenario. I'm in a place where I'm like, dude, we did a full inspection. We did a walkthrough. There was no leaks, and then 3 months later, we get a call at 11 o'clock at night that there's a leak. So where I'm at is that we put our foot down and just said, hey, we're not, when we left, there was nothing there. So, because they tried just putting everything on us, like it has to do with plumbing. You guys have to deal with this, but with there being multiple contractors, My question is, has anybody ever ran into it? And if you guys did, how did you guys pretty much deal with this situation?
Get a signature on that final inspection from whoever hired you, and that's your record that they agree that it didn't leak at that time. So any damages after that should be somebody else's.
I'm seeing heads nodding all over the place, Fernando.
They're assuming liability for the damages at that point rather than you, because they agreed that you performed the work to that standard.
Yes.
Okay.
And I would even go a step further, Fernando, especially when you're dealing with multiple contractors, when you're dealing, let's say you're being subcontracted out, maybe you're working under a GC. We have to make sure that everything is documented and signed. Verbal agreements mean nothing. Maybe it did 50 years ago. It means nothing anymore. We've got to have things written down. So, a working agreement before you even start the job, where these are our draw schedules, this is the payment arrangement, this is a scope of work we're agreeing to doing, this is our change order policy. You need to have all of that written down, and both parties need to sign. And in this case, you might even have the GC sign it too. You, the GC, the client. Everybody needs to be on the same page of how we're moving forward with this job. And when you do the final walkthrough, like Brandon said, and I saw heads nodding all over the place, we've got to sign, and we've got to make sure that in our working agreement and in that final inspection, we have verbiage that talks about, your warranty policy, what you will and won't cover, and that they're signing that everything looked good, they approved, we're good. If you have all of that, you might still be dealing with the situation that you are currently in. I'm not saying that's going to mean you won't have these situations, but at least you have your documentation, your proof. So if something were to go to court, you've got all of your ducks in a row, of this is proof. They approved everything. This is not our liability or responsibility. It's not covered in the warranty, and it cannot be proven that we even did this.
Okay.
I just was curious, Fernando, what did you guys discover was the cause of the leak, or what was leaking?
They said that it was a supply line. So they got custom cabinets. Everything was custom. It was a very nice high-end home. So when we got there, they left it all open for us to do the plumbing, and then the cabinet people came behind us and did all their measuring and installation. And then 3 months later is when they said that there was a leak going on. But
To me, I'm a general contractor. I know in California things are a little different. We have to warranty our craftsmanship and our workmanship for a year. But if to me a supply line is something that is a charged line, and that's going to leak pretty much from the beginning. Once you open it up and you turn it on, there's a leak. It's going to happen. It's not like a drain line where it's going to be a slow drip here and there, and it only does it when the P-trap's full or something along those lines. So for me, like if it caused $4,000 worth of damage, that's either neglect on the homeowner for not noticing something like that, but it couldn't be, hey, for 3 months this thing's been leaking, it cost $4,000 worth of damage, and you never noticed it on a brand new kitchen. To me, that would be a red flag and something that I would bring up to the client before I just jumped on that grenade and been like, okay, we'll take care of it. I get it. You want to do what's right. But, to me, I kind of spin it. Yes, I was the plumber on it. But here's what happens when a supply line leaks, right? It's going to spray. It's going to be a constant drip. You're going to have noticed water. You're going to have cleaned something up within the last 3 months, not just one day today. If that's the case, is it a faulty now is it a faulty part? Can you go back on the manufacturer and, you know what I mean, and sort of work that angle with it? But, we deal with it quite a bit and a lot, and then you dig a little bit and the homeowners might be like, well, I mean, we did kind of shove some stuff under the sink one day, and you know what I mean? If you dig a little bit, Fernando, you start they will trip themselves up on it. Right now, they're looking for someone to take the ball and run with it.
Blame.
And it's not right. So I would just say use caution. The whole signing off on everything is a great thing to do, because then it tells them we inspected this together. There was no drips or leaks at that time. But, at this point, you don't have that information. So
This
I
is
would have.
why I love getting clients' feedback, because how you guys may feel when we as coaches start throwing out words like real revenue and total revenue and all of that stuff, you might be like, these are foreign words to me. Pretty much everything Ryan just said was like right over my head, like no idea. So, you guys know construction, we know business, and so it's always nice to get feedback from clients, because they're going to be able to kind of speak your guys' lingo when it comes to that type of stuff better than we can.
Yeah, I think an important thing that Ryan said in that too was the education aspect. He didn't say it in the same way, but I'll kind of summarize it like this, where he said you're not telling them how they're wrong as much as you're saying, hey, this is a charge line. If this was busted, this is how this would look. This is what would happen. Did you see anything like that? Was anything like that happening in the lead up to?
Yes.
So it's more of an educational thing and not like a condemnation or a, what's the word?
They don't
Condescending.
know. They're probably like me, where I have no idea how any of that works. I just know that I had work on my job and now, on my house, and now I have a leak. So I'm going to be trying to point fingers because I don't understand, So I think that's a great point, Bryce. Philip, I see your hand. Jordan, I see yours. Jordan, I think yours may have been up first. So if you want to put in the chat or unmute and tell us what you're thinking. Maybe he put his hand back down.
He's having some audio trouble there.
Okay.
In the meantime, there we go.
Oh, there we go.
I was going to say, while we're on the CYA, we're an electrical shop, so we do things a little bit differently, obviously, because we don't have plumbing leaks. Electrical leaks are a little bit more dangerous because you shock people or start fires. Yeah. So we try to keep that stuff to a minimum. But when it comes to the customer, if we do a big rough in on a custom home or even a spec house, one of the things that I stipulate on every contract now is that any markings that we make on a project supersede whatever is on the prints, and that we take photos of every single wall on every rough in, because people forget stuff and then they'll come back and they'll be like, well, no, I didn't ask for that. And then I'll be, hey, remember the day we did the mark out? We double checked and made sure that we wrote down exactly what you wanted. And we can actually go back and reference those pictures to show people, hey, this is actually what you asked for. And I can't even tell you how many times that has saved us, when it comes to dealing with objections from customers, because people forget stuff,
Absolutely.
It's the idea, kind of like over communicating is over documenting.
Yep.
Yes.
It's good. You got something,
Phil?
Philip?
Yeah. So on that, that's kind of the crappy thing about being a plumber, right? Is that our leaks do cause a ton of damage, right? And that's why our insurance is so high. But when you get into that and they call in, the best thing to do there is you got to go there and you got to evaluate that with whoever the lead is. So if that's still warranted under the general, technically you need to meet the general there. You need to evaluate what the problem is, right? And then you need to determine on what's going on with it, right? So if it was a cabinet guy, right? Well, did they set the line? Did they set the cabinet on the supply line, which stretched it and pulled it? Did they trim it and nick it, which then at that point it compromised the material that we put in that caused the issue? Because after that, that's not our point at all. I had something similar to this on another remodel I did, to where they were assuming that it was a bad crimp joint on mine. So I met the general there. We walked through it. And how I did it is like, all right, I'll go through, I'll open up the wall. If it's my fault, I will pay for the repairs, right? Whatever, right? But if it isn't, you're going to charge me for all my evaluation time. You're going to charge me for the parts, right? And then at that point, right, depending on what it is, that kind of puts a limited warranty on the whole project, right? Well, come to find out, when they had to put up their sheeting, they hit my line like 3 times with nails, and that's actually what created the issue, which created the bad drywall, the sheeting, warped all those hardwood floors. So that was nothing on me. But the biggest thing is I was there when they did the evaluation to find out what was leaking, so that they couldn't do something to turn it around and blame it on us that we couldn't back it up because we weren't there.
And I
would say,
love that, Philip.
so
And I
your
think
biggest
that's huge.
thing, your biggest thing is you have to be there, right? It doesn't matter what you're in the middle of. You have to stop, and now that is your biggest priority. You have to make it there. Because if somebody goes there, like if the cabinet guy goes there and he knows he did something, pretty easy for him to do something different to modify that to where now it's not on his liability and it lands on you.
Yes. And I think another thing that is key there is calling to the higher power. So it doesn't become kind of like a he said, she said, or I'm trying to weasel my way out of it. It's there's me and then there's the general contractor who subcontracted me out, and they as sure as hell don't want to be liable for this. And so you've got kind of another grounds of authority, you've got another opinion. What you say is going to sound a lot more trustworthy if you have somebody who's not necessarily like working with you or for you right there with you. So I think that that's a very powerful. And another thing, guys, anytime you are dealing with a difficult customer, a difficult situation, a difficult employee, please, for the love of all things holy, do not be texting and emailing. Does not translate over text. Things get misread, things get convoluted. You need to get there in person is ideal. If that's not possible, you're at least getting over the phone. It's just, I constantly see things spiral and get stickier and stickier when we try to solve things over text or email. And so get there in person as best as you can. Any other questions? These have all been great and such good feedback. I feel like I've learned some things today. I also learned a few new words today too that I'm not sure what they stand for, but there was some type of fitting that got thrown out that I was like, wow, it's a new one. Don't know what that is. All right. Okay, well, Bryce, I'll let you kind of get to your presentation here. We're going to be talking about profit and loss statements, so I have a feeling we'll probably have a few questions after the call as well. If we don't get to your question, feel free to shoot an email, book a laser call, but we'll definitely try to leave a little bit of room for questions because I know that when it comes to accounting, that can be kind of an intimidating topic.
Sweet. Alrighty, folks, let's roll. So tax time tends to be the time that most people actually look at their numbers. You may be looking at a P&L and actually familiar with what that is being used for or said or not. Maybe you just keep hearing it now lately. We want to equip you to get a dangerous understanding is how I like to put it. Enough to be dangerous. We're not going to have, a college course on this. You could, but we're not going to do that. I just want you to know what's helpful. I know this has been true for Nicole, and it's probably true for some of our others. When we look at numbers, now she's the numbers queen. I have to say it every time. But we hate math, hate numbers, and it's just because it's numbers. The pie chart is the same on both sides. So even and especially when your numbers are bleak or you just hate looking at them, we still have to. If you just know, they're probably not great, or there's not a whole lot of money in my account, that's really not enough. It's worth it to you to get enough of an understanding. So I may move through some of this stuff a little bit faster. I prepared just in case we had no questions to have a lot longer presentation, and I'm glad I don't have to, because the questions I think are somewhat even more valuable than this. But quote here, if you don't know your numbers, you don't know your business. Just to reiterate that point, even if you don't like looking at it, it's worth looking at. So when you're talking about getting an accurate P&L, you may not feel like you're a financial guru or a wizard, and that's okay. You're a business owner instead. You hire people to be the financial gurus. However, you should still be able to kind of assess if your profit and loss statement is reasonable, right? You may not know all the details, all the answers, but you may not, you should be able to see if it's somewhat accurate. So if your numbers don't seem accurate, trust your intuitions. If it's way less or way more than you expected it to be, or if you see that every month the number seems to be like really close or exactly the same, maybe numbers like payroll that Okay, that I know exactly how much that costs me every week because I'm struggling to make that. And yet my profit and loss statement doesn't seem to add up. Trust that intuition. Ask the question, because when we have talked about this before, one of the questions that I like to ask is, what are the reasons a profit and loss might be inaccurate? Most times it's because things are not categorized the way that they should be. They're showing up in the wrong place. So look for those key numbers that you kind of know, like payroll. Or if you know exactly how much you spent, a certain month on materials because you just had one job or something like that. Use those anchor points to really figure out, okay, is this accurate? Did stuff get put in the right place? Something that you should expect in a P&L, just as a brief note here. Revenue will change month to month. It'll be up and down. Labor, variable expenses will move up and down, but you're mostly familiar with it. Business owners tend to be. Another thing is you should have somewhat consistent, especially if you've been working with us for a while, your gross margins should be somewhat consistent, so long as pricing has been consistent too. So just a couple things off the top, but I want to teach you guys the best way to get the most insight from it. Always put a profit and loss statement, and I'm going to show you some examples here in a second, but always put a profit and loss statement in percent of total sales, revenue, income. The top of your profit and loss statement is going to be one of those things. They may call it something different, but it's always your sales, your revenue, or your income. And we want to put everything in a percentage of that because that helps you see what's true. All right. Again, I'm going to give more detail on this in a second. That's where I'm going to spend most of our time here. But the last thing here, tax season, you're thinking about it. If you only use a bookkeeper for doing your taxes, we would strongly recommend consider doing it for more than that. Have one ongoing. It is worth it to you. If you've got an office staff that can do some bookkeeping, wonderful. If that's accurate, if they do a good job. If you only use a bookkeeper for taxes, it could be worth it to, most often is worth it to have somebody actually ongoing. On a monthly basis, you meet with an actual bookkeeper. Tracking with me? Sweet. Okay, I promise I'm going to try not to make it too dry. So I talked about a second ago, putting your profit and loss statements when you get them from your bookkeeper or you get them from your CPA. If they're not already, put them into percentages. It's called a common size analysis if you have to use the proper lingo. If not, you don't need to know that term. It's irrelevant. But like Nicole said earlier, we want to tell you some general percentages. This can vary depending on the nature of your business and how things are categorized. You may be, for the dumpster rental guys, they probably have a pretty low labor, but they have high dump fees, which is like a material cost in a sense. So things look different for that kind of a business versus somebody that's a subcontractor and subcontracts out all of their labor, and they have maybe one person in the office or themselves. So these are broadly true, and we'd like to work with you to get it more detailed true. But everything is in a percentage of your sales, so that's 100%. $100,000 of $100,000 is $100,000. It's 100%. The second part on a profit and loss statement, there's 5 total that we'll talk about. The second part is your cost of goods sold. Think of this like your variable expenses. So what it costs for you to produce your product or your service. We say this is 60 to 70% if it's categorized in the right way. Cost of goods sold. Your gross profit, which is your the money you've made after your cost of goods sold. This is the third part. That has to be at least 30%, just like Nicole was saying earlier. If it's not, you have so little left for everything else that's important to your business that you really are starting from behind. Does that make sense? Oh, I heard a bop. What's up, Fernando?
I don't know if it's sorry, I don't know if it's probably the right time to ask questions, but
It's all right.
Never a wrong time.
does that the what did you call it? Common goods? or profit
Cost
goods?
of goods. Hmm.
Cost of goods. Does that include the pay of the owner? Or like say there's two owners, the pay of the two owners that are working on that job. Pretty much it's me, myself, and then we have an apprentice. Or me, not myself, me and my other buddy, my business partner, and then an apprentice. So would we take out our pay and then plus parts and whatever else it costs to get the job done? And that should all mount up to 60%, 60 to 70. Is that
So are
is that
you,
correct?
yeah, are you salaried, or do you get paid in a
Uh,
fluctuating amount?
we're salary.
Okay. So I believe that means that it would be in the expenses portion of your profit and loss statement, because it's more of a fixed cost. So it comes out in the expenses section, which is actually the next one on here, instead of in your cost of goods sold, because you get paid whether the work is done or not. That's what it means to be
Okay.
salaried. So that's why
Mhm.
that would go there.
But one thing that you want to think of, Fernando, like if you're trying to figure this out to figure out your is if you were a true business owner and not an employee, like you were not out there laboring, you would be paying somebody else to be doing the work that you are doing. And
Right.
so if you're trying to figure out your cost of goods sold percentage, you need to think about, okay, if I remove my pay and make it, owner's pay or put it into overhead, it's not in cost of goods sold. What would I be paying a traditional laborer to
Yes.
do the work I do
So what I
on
would,
the job?
yeah, and I think a good point in that is that these percentages here are to understand your profit and loss statement, which is your business as a whole. It's not to determine how you do your pricing necessarily. It can help advise towards that, but it's not going to be exactly like this. This isn't how you should draw up your estimates based on what's on your profit and loss. Because there's,
Okay.
yeah, some other costs, and we have tools for that. There's also group calls on that where we talk about an estimating tool in particular, but this is just relegated to the profit and loss statement, understanding the whole puzzle, not just the estimating. But great question.
Okay. Thank you.
Yeah, yeah. So income and sales, part one, cost of goods sold, variable expenses, what it costs to do the job. Consider this as simple as your labor and materials. And then third part is gross profit. Fourth part is your operating expenses. This is salary positions. This is fixed costs, things that you pay whether or not you do work. Insurance, rent, uh, things like that. And then the last piece, this is the one that everybody knows, is your net income before taxes. The goal is 20%. Everybody knows that number, at least 15%. Again, this is the broad strokes version. That can look different for different businesses, but typically this is what we see and what we kind of shoot for. I hope nobody's feeling this way right now, but if you are, I've got some help for you. So most of you are going to get something from an accountant that looks like this, and this may make you feel even more like that picture you just saw. Yep, I'm used to these. This is confusing. I see a bunch of numbers. This is it's a couple numbers different, but one of an actual P&L that I've gotten from a client for last year. What I do and what I would encourage you to do is to really just get rid of all the extra noise and try to look at just those 5 parts we talked about a second ago. So what I do is literally this: I make a copy and then I reduce it down to those things by hiding the other columns. If I unclick this, you see all the other stuff that was on this other one, and I do it as a total. It's really helpful to have month by month, but that's if you're going deep into the analysis. So I just did the total at the end and a percentage of the sales. This is what it means to do common size analysis. This is how I want you guys to do it. This is so much more digestible than the other stuff, right? You guys agree with that? Does this feel more manageable? I promise you, this is how we look at profit and losses whenever you send it to us. If it comes to us like this, we're taking it and we're turning it into something like this so that we can understand and make insights. And that's how you ought to do it too. We good with that? Cool. So, I saw Brandon, you had a question about getting that sheet, and Jordan kind of the same one. What can one of you clarify what you mean by that, or what you would like?
I think they just want a copy of that profit and loss spreadsheet that you just showed.
Sure. Yeah, we can do that. Okay. Yeah. I will say what I showed is what was done to a profit and loss. So all you would have to do is to find those 5 parts. Each time you look at a profit and loss statement, it's going to have lines that separate some of the sections. So you look for those keywords.
Bryce,
Income.
and for those of us who are spreadsheet ignorant, myself included in that statement, guys, how do you hide? Show us how to hide them without
Sure.
messing up the spreadsheet.
Right. So all you do is you highlight the rows. You click the numbers, click and drag to highlight the rows. And then I right click it, or you can, I always right click it. And then there's a drop down that says hide rows. And you can hide them like that.
Bam.
Hide rows. That way the numbers don't get deleted. So the reason I say I asked about you guys wanting that spreadsheet in particular is because I don't really think it's going to be helpful to you guys to have this one as much as it is like knowing how to make your profit and loss look like this, because it's not going to autofill to look like this from whatever you put in your P&L. It won't do that for you. So is that
I think
helpful?
we're good.
Okay.
Yeah. And when you guys go to pull your profit and loss statements, like if you're trying to get them from QuickBooks, a lot of times PDF format is like the first format they suggest, but you should be able to get it in an Excel or spreadsheet format. And anytime you're looking at profit and loss statement, I would do that so you can do what Bryce just talked about and make it a lot easier to read.
Yeah. So to your question, Brandon, when you pull it from QuickBooks, pull it into a spreadsheet format, and then yes, you can do it that way. If you pull it as a PDF, then it's just going to be a set document, and you can't really play with the numbers. There's no formulas or anything like that. So yeah, if you pull it as a spreadsheet, you could do that. Google Sheets and Excel work the same way, but Google Sheets is free. Okay. Last couple pieces here, and I'll let us go. And we won't have a ton of time for Q&A, but talked about the ideal percentages, showed you how to see those percentages on your own. Mine isn't lining up. What do I do? Simple version is this. Follow just a simple pattern of questions for yourself. It's not always about cutting expenses. Consider what you can control. What's too high? If it's too high, what's too low in terms of those percentages? And then what factors feed into that? If your cost of goods sold is too high, what feeds into that? Labor, materials. What can I do about that? Could I change the way that I pay? Could I change how much my materials cost by working out a volume discount? Things like that. On these slides as well, I've got some ideas at least of what you can do in each of these areas based on if they're too high or too low. And a lot of the things on here are not cutting expenses. It's a lot to do with how can we improve. So like if your income or sales is slacking, like you just know, I just need to make more money. Consider your pricing. Potentially you could never reach this ideal percentage because you're pricing yourself too low. You're undervaluing the value that you create. Can you package services together? You know, some of the stuff we've got on selling well with tracking that helps you identify whether or not you're selling well. Same thing with the cost of goods sold. I know I'm just kind of blowing through a lot of this stuff, but you guys have these resources. It's in the group calls, in the inventory, in the archive to go more into detail. But there's ways to get your percentages to line up. And I want to give you the simple takeaways, which is the pattern of questions, which is, got a lot to undo. There we go. What's too high? What's too low? And what feeds into that? And then overall, get your profit and loss into percentages based on your sale. That's what I want you to take away from the call. Cool. Okay, I'm gonna take us out here. What further questions, thoughts, comments, concerns do you guys have? I've given you my piece here. And I know there's probably a lot of questions. We probably won't get to a lot of them or all of them. But what thoughts do you have? Was that a new concept for anybody? The idea of putting it in percentages? Seems like it was for a few.
And if you have a bookkeeper, guys, a lot of times you can ask them to add percentages to your profit and loss statement, so it's automatically done for you, where you can see the percentages. That's what we're looking at. You know, we're trying to find percentages because that's what really indicates to us what's going well and what isn't. And
Yeah.
so if you have a bookkeeper who gives you a profit and loss statement every month, just ask for them to add percentages to it.
One other thing that I'll mention and give you guys a second to think some more. With your bookkeepers, or CPAs, they may give you a profit and loss that's, they say it's a cash basis or an accrual basis. To spare you all the details, I prefer cash basis because cash is king. Accrual basis can hide some things. It's important to look at in some areas, but if they give you an accrual basis, just go ahead and ask them for a cash basis, and that'll be more insightful, I think, for
They'll
most
be
of
more
us.
accurate to what's actually happening in the business.
Right. Philip, what's up?
One thing I wanted to review real quick, just because it came up with me and Alyssa the other day. As I'm starting the tracking, right, and it's probably because I'm not doing it all the time, so it just comes in and goes right back out. But actually, how do you find your profits, right? So as I was going through and doing the tracking, right, I can find what I brought in for my revenue in January, right? But how do I determine what my percentage of profit was to where I could enter it into that tracking?
Are you talking about the monthly net profits in the master tracker?
Correct. Yeah.
Okay. Yeah. So if you're not getting formal P&Ls, your bookkeeper can do a P&L together, and they kind of distribute out your annual cost to make it more accurate. But if you don't have that, you're not getting P&Ls on a monthly basis. A starting place for a lot of people can just be looking at your bank statement and subtracting the total withdrawals from your account that month, and it gives you a snapshot. That's not picture perfect. That's not best practice, but it does get you started. Otherwise, it would be from a profit and loss statement, which goes and categorizes your expenses. You might be able to get it from QuickBooks if that's connected to all your accounts.
Yeah, it is. And what I was wondering, isn't it you minus your gross and your net and something else, and then that gives you your percentage? Isn't it something like that? And then you get your percentage of, or at least relatively close.
Yeah, so that's actually the 5 parts here. Is you got your sales, you subtract out your cost of goods sold, and you subtract out your operating expenses, and that takes you straight down to your net income. If you only subtract out your cost of goods sold, then that just gives you your gross profit, which is fine to know, but it doesn't really tell us a whole lot. So, yeah.
And Philip, if you're like, hey, my QuickBooks is a mess, I don't have a bookkeeper, and I'll tell you guys, that's 99% of the clients that come to us are in that situation where they're like, the money comes in the account and the money comes out, and that's all I know. That's most of our clients, that's where they start. So you're definitely not alone if that's where you're at. What might have to happen is you might have to track your jobs individually, where you're like, this is all the income that came from this job, these are all of my expenses, and then you might have to print out your bank statements and figure out how much you're spending on overhead, and really be able to track, this is all the income that came in, this is all the expenses that happened this month for overhead, for cost of goods sold, for what I paid myself, and at the end of the day, what was left. That's my profit, and eventually if you have a bookkeeper, if you're entering things into QuickBooks accurately, you won't have to manually do that. But a lot of my clients, that's where they kind of have to start because things are just a little bit of a mess in the beginning.
Right. And I do have a bookkeeper that I meet quarterly. I've been doing that for 3 years just because I don't trust myself at all to manage that. Right. I was like, oh, even if it's just to check it, even if I am doing good, it's worth it just for me, it's just a peace of mind, right? Like, and I tell him all the time, I was like, dude, just keep me out of jail, right?
Yeah.
And like quarterly, he goes through and he like checks it and he tells me, he's like, oh, well, this quarter you had, you know, a 30% profit. Okay, great. You know, and then like he figures it out, but I'm not like sitting there and be like, wait a minute. And I probably should be like, wait, how did you figure that out? Right. Because I know he can do it on a quarterly, but like doing it to where I'm trying to figure it out, you know, sitting here going, God, how did he do that? You know? That's kind of where I was wondering what that question was. Because I know I can break it down like in my QuickBooks as far as like just for the January profit and loss, right? But then that just tells you what came in and what was left over, but it still doesn't give you a percentage, right?
Yeah. You would just, to get the percentage version of that, right, you would just take the total sales divided, or sorry, other way around. Whatever the number is that's left over, divided by the total that came in. And that would give you your percentage.
That's
and
what
we
it is.
can we can talk about that more on Tuesday if you want, Philip. I know we were kind of cut off whenever we were talking about it in our last meeting, so we can go over those percentages.
Okay, no, that sounds good. And I was not cut off. I was preoccupied.
Well, I appreciate
Nice.
you making this call, and that's kind of a word to the wise to everybody here. You know, this is the structure that we're kind of going to be playing with moving forward with group calls, just so we see it more valuable to get you guys better feedback and more relevant to what's currently on your mind or you're currently dealing with. And so just make the group calls, come with questions. And if we aren't able to get to your question, if you know, need more guidance, that's what laser calls are for. So book them.
Yeah,
But
feel free to give your coach feedback as well. We want that.
yes.
So
But if I could get everybody to unmute, I am going to close out this call the same way we do every single one, and that's with a big 3, 2, 1 growth. So I'm seeing the unmutes coming off. We're going to do 3, 2, 1.
Growth.
Bye, guys.
Bye bye.